Really unchanged, 70 points lower on the Nifty. Neither are the bears able to really make a bigger headway with a big slide. And the bulls obviously haven't gotten far on a day like today, 10,650 on the index. We have Mr. SP Tulsian of sptulsian.com as well as Mayuresh Joshi of Angel Broking joining in. Mr. Tulsian, good afternoon. I'll go back to the point on Yes Bank because that's been one of the key movers on the way down. Still down 3%, but do you think this is just a one-day event, this slight profit-taking that's happened after the RBI issue? Would you look at buying the stock afresh?
See, Surabhi, in the morning also I have said that the technical positions will make the stock to correct by 2-3-4%, and 210, on a ballpark basis looks to be a good figure, and we will maintain the same view because maybe out of enthusiasm. In fact, I don't think that there has been any kind of problem in the past when the banks have reported the divergence and the report, because that has been seen usual with many of the banks having reported the divergence, and that's how the media and people at large came to know. And I don't understand why the RBI has objected for this time. Maybe because that was the point of that nil divergence report. So maybe you can call it as an enthusiasm or you can call it as compliance, but I don't see anything wrong in that, in informing this type of events. If that can spoil the market cap or maybe the valuation of a stock, why not the nil adverse report, getting intimated to the exchanges. But anyway, let's not dispute and argue on that point, merits and demerits of the reporting. But I think that the stock is seeing just correction because of the stock scene having gone into the overbought position. We have seen it rising by 32-33% prior to that on a single day. So probably, yes, the things are seen getting liquidated. And sometimes what happens that many of the retail investors, they buy the stock at a higher level and get panicky the moment it corrects by a couple of percentage also. So maybe I think considering all those things, the stock is seen to, in the morning also I have said that 210 is seen to be a good level to enter into the stock as an investor. And I think this is just a near-term weakness and I don't see any problem. And in fact, let's take that one more point, that from 1st March, Mr. Gill will be taking a charge. And in fact, I am keeping again a very positive view on Mr. Gill, taking as, coming as at the helm of the affairs of the bank as CEO and MD. And that will definitely be having the positive impact going forward on the share price as well. So yes, at maybe at around 210, which was the level given by us earlier also, that look to enter at those levels with a view of maybe about 2 to 3 months to see the share further rising to a level of 240, 245.
Okay, by the way, just pull out the intraday chart of Cholamandalam, because that's one stock where you've seen quite a bit of selling, but just in the last 3 or 4 minutes, there's some bit of buying which might be happening. Mr. Sen, good afternoon. Your thoughts on stocks like say Cholamandalam or Shriram Transport? You think there's unnecessary selling happening here? Do you look to buy any of these stocks?
See, Anuj, when you hear the experts, maybe I'm referring the stock market experts, and you see the stock like Ashok Leyland getting corrected for the reason that CEO is not. CEO is moving out now. That is old news, 2 to 3 months back. I'm just giving the background for Cholamandalam and Shriram Transport. So you get negative, and in fact sometimes maybe in that pessimism we add that there is dearth of the truck financing available as well. But when we have heard both the management, Shriram Transport and Cholamandalam, who have been pioneer in truck financing, Shriram being the largest truck financier for the second-hand trucks, and Cholamandalam for the new trucks as well, maybe of their book about 35% for the truck financing. They have not indicated any kind of things, and if I'm not wrong, probably amongst all the NBFCs, Cholamandalam is the only NBFC which has shown a sequential growth of about maybe double-digit disbursement growth. So I don't think that when you hear the financials, you find any kind of pessimism seen either built on the commercial vehicle finance or squeeze of finance not available. The pedigree companies are seen having the finance. I'm not talking about the rate. Yes, they have all gone expensive, maybe by about 40-50 basis point to as high as 150 basis point, depends on each NBFC. But I don't think that there is any kind of shortage. So yes, taking that into consideration, in fact, we have been giving positive view on Ashok Leyland also, because for calendar year 2019, we are keeping positive hopes on account of the BS6 introduction from the next financial year, and that will lead to see the pre-sales of B6 happening. And if you are having a positive view on CV sector, you have to remain positive on the stocks like Cholamandalam and Shriram Transport.
Oh yes, I think Stilson hits the nail on the head. The reason I was pointing out this stock is because now you are seeing even companies which came out with good numbers, good disbursement, good asset quality, they are also getting punished because you ask what should you try to buy in a bear market? Try to buy stocks which are falling in sympathy with the rest of the market for no fault of theirs. So I think that is where the differentiation needs to be made. And that is where I think you will find out once this whole madness settles down that you will have the distinction between good companies and bad companies. So.
Oh yeah, absolutely. Actually, when today financials overall have been a weak lot. Lots of names have been L&T Finance Holdings, Edelweiss, Repco Home, plenty of names on the downside from the NBFC universe. Actually, speaking of names on the lower side, watch out for the mid-cap index. It continues its grind down. The gap between the large-cap performance, mid-cap performance, it's growing. We're almost 1% lower on the mid-cap index. Mayuresh, good afternoon. One stock for you, Apollo Hospitals, which started falling off the cliff quite significantly because of the pledge share issue once again. Now, is this an opportunity if you believe in the franchise? Would you look at buying the stock at current levels or would you stay away?
Afternoon, Surbhi. I think a couple of overhangs that probably had a say on the stock, and you're absolutely right. I think the issue of pledge, which the management also has categorically said that I think they will obviously look at getting it down over the next few quarters. And the second element in terms of the sub judice matter in the High Court. Apart from that, I think if you probably look at the core fundamentals that the stock has displayed, not just in the quarter gone by, but over the past few quarters, I think the hospitals business is doing very, very well. Now, even if you look at the new hospitals contribution, including the one in Navi Mumbai at the EBIT level, I think that's a very, very encouraging sign. On the other hand, when you're talking about the pharmacy business, I think the majority of the old pharmacy stores is clearly getting played out on their EBIT margins, but the overall performance is also very, very robust. One of the other elements that was also plaguing the stock was the kind of capex requirements that probably need to get done with in terms of opening of new hospitals and so on and so forth. But I think they are having a very, very conservative approach going forward in terms of new capex for new hospitals. And the other parameters that one really watches out for, the average revenue per operating bed has been pretty stellar, specifically for regions like Chennai and Hyderabad as well. The average length of stay, again, has been quite reasonable, as has been maintained over the past few quarters. And as I said, I think the EBIT margins, both for the new hospitals and the pharmacy business, is an encouraging sign. From a valuation perspective, yes, I think where it was trading a couple of weeks or a month or a couple of months back, was obviously at a higher level from an FY20 perspective. But I think as these concerns get addressed, maybe over the next week or over the next few weeks, my own sense is that every decline becomes a very good opportunity. I think we remain optimistic on the stock from a long-term perspective.
Mr. Sultan, thoughts on Britannia? That's making a comeback. You think it's just some short cover? Or is there some genuine buying here, considering it's fallen a lot after its results?
I missed the stock name. Can you?
Britannia, Mr. Sultan.
See, Anuj, in fact, if you recall on Friday afternoon, we gave a buy call on Britannia, because if you really see, and I've been categorical in saying that, even if you go by the volume expectation of the market, volume expectation was expected to be at about 10%, while the company has delivered 7%. And I don't think that in case of Britannia, where the products are seen to be more of the bread and biscuits, you can expect this kind of volume growth, because you cannot compare the company volume growth to be comparable that with the Jubilant Food or maybe Dabur or with Hindustan Unilever, where the product mix are seen to be altogether different. So yes, we have been giving a positive call. And in fact, if you take a situation going forward, I think that I was not disappointed at all with Q3 numbers, maybe on the financial front and maybe on the volume growth front. And in fact, the corrections, which we have seen, in fact, in the morning, we saw it correcting below 2800 also. And sometimes, if you have the conviction, we get nervous, when we want to buy even the conviction stocks also when they correct. So this should be used as an opportunity. And in fact, maybe on a Friday afternoon, if I'm not wrong, I've said that I don't find any reason why the stock cannot move to a level of about 3200 in next 3 months by the time we will see Q4 numbers. So yes, even though the stock has moved up by about 8%, 7 to 8% from day's low, but still I think it qualifies as a portfolio buy. As I said, that maybe one can look for a target of 3200 in the next 3 months by the time we see Q4 numbers from the company.
Okay. Finally, Mr. Tulsian, just thoughts on the some of these Essel Group stocks which have gotten active of late. Again, we were just discussing on technicals, we were discussing this earlier, but fundamentally, now that Z has already rebounded so sharply from the lows, is there any sense in buying it fresh at these levels, or would you now wait for the event to settle, maybe wait for the stake sale to happen and then look at Z?
See, if you again see the process, maybe if I take 4 companies of Z quickly, Z Entertainment, Dish TV, SL Propec and Z Media. In fact, I find values in all. We all know that Z Entertainment is due for monetization stake of promoters. Whether that happens 50% of promoter stake or if it happens 100%, I won't rule out the possibility of 100% stake sale also to an overseas company. And if that happens, now it's a matter of price, at what rate it can happen, which is speculated at anywhere between 530 to 540. And when on 3-4 days after Diwali, when management have said, I said that it can fetch a price of 540, 545, which is now being talked on in the street also. So if that happens, then probably the focus of the promoters will go back on the companies like Dish TV. But yes, SL Propec, which is again looked after by one of the brother, that is Ashok Goel, was otherwise also up for sale for last 2-3 months because maybe his lack of interest in continuing with the business. And again, if you take the case specifically on SL Propec, I am first coming on that. That is again due for stake sale, and again it has a promoter stake of, if I am not wrong, closer to about 60%. It has a top line of closer to 3,000 crore. Debt is not seen to be very high. If you knock off the working capital loan, I don't think it must be having a debt of more than 300, 400, 500 crore. That means an EV of 4,000 crore for a packaging company which is largely catering to the oral care, pharma and all sort of things with a multi-country location with multinational plants. It seemed to be very good asset, and a lot of private equity and 1 or 2 foreign similar peer group companies have evinced interest in acquiring the stake. And if that happens, that will be seen quite positive. And as I said, that if promoters sell 57-58% of their stake, that will trigger the open offer also, where the acceptance ratio should be seen quite high. So yes, keeping positive view on SL Propec also, and similar is the case with Dish TV also. I won't be surprised to see the value accretion scene happening because the fear of the fall or the news of the pledge shares, which has happened, has taken a toll on Dish TV also. I'm not saying that the Dish TV has a very good upside potential from here on. We are the least bullish on Dish TV because it has already risen from a level of about 20 to 38, 39. And maybe the upside can get capped at about 43, 44, 45.
All right, Mr. Tulsen, thanks a lot for your time today. And of course, we'll talk to you tomorrow now. For now, we'll have our Alpha Manager for the day, Ronak Onkar of Parag Parikh Financial Advisory Services joining us. Ronak, hi, good afternoon. Thanks a lot for joining us. Now, I am... is this right that at your firm there's a departure from the past thesis of buying stocks offering deep value? And why is that? I know the market's been bipolar, but why that shift?
So it's not a shift in the way we approach investment and valuations. It's interesting that we have been tracking Amazon for over a decade as investors and have been customers for far longer than that. What is interesting is the systematic misunderstanding that we had about how the business operates. Also, 2 factors changed our point of view. We were also putting some effort in understanding how the cloud computing business operates, how the industry operates. In the form of AWS, which is the largest market share cloud computing service provider in the world. And there's another emerging category of business within Amazon, which is the advertisement on Amazon as a platform. So these 2 business areas are actually immediately profitable for them if they really monetize it properly. And all the gains go directly to the bottom line, whereas most of the new investments in growth and retail happen in categories which are not profitable today. But over a period of time, as the categories mature and as the share of Amazon as a retailer grows on the online side, it is also seen that some old categories become profitable and the newer ones will keep bleeding for a while. So clearly it's not a departure, but we are evaluating. That's why the position is only 0.5% right now. And as and when the conviction builds, we will keep adding. Or if it doesn't justify the numbers, we will sell it.
So Ronak, good afternoon. When it comes to domestic holdings, no such change of heart. I mean, we've always had this discussion about how some of the better performing stocks in this market, where there is growth, they're just coming at a very expensive price. And that's what we were just discussing. I mean, look at the buying that's come back to now Nestle, stocks like Britannia, United Breweries. I mean, people simply go back to the same old ideas because there aren't too many other new ones around. What's your take?
Yeah, so we have been of the view for a while that the frontline consumer ideas have been very expensive, and they still are expensive irrespective of what the markets have been doing for other areas in the stock market. But we clearly see that there are opportunities to buy. So whatever we are already owning, some of the stocks that we already own, we have been adding wherever we see the valuations are still reasonable. So it's not entirely outpriced for us. We keep evaluating far more ideas than we buy. Hence, the companies that we know better, which are already in the portfolio, they get the first priority if the valuations are reasonable to buy.
Okay, fair enough. Just looking at how the nature of this market has been, Ronak, you've seen many market cycles. This kind of bipolar nature, what is this indicating? Because, yes, mid caps have corrected, but even Nifty junior stocks, some of the bluest of blue chips are now resembling levels of 8,000 on Nifty. And there are many names like Ashok Leyland, Motherson Sumi. There are many names where you can't perhaps doubt the pedigree of the management, you can't perhaps doubt the pedigree of the company, and still we have seen 40-50% decline in the stock prices.
I think a lot of times, so in the very recent theme that we have seen, which has played very well, is that quality stocks were bid at exorbitant valuations. And there is also a little bit of narrative driving some of the valuations. People who are very flexible in valuing companies liberally will keep on bidding up the price, whereas people who understand how the valuations can also be cyclical will generally shy away from these kind of high valuation multiples. And that happens eventually, and when the narrative does not play out, there is a blip in the quarterly results, and the conviction is not so high, you can see valuations cascading far lower, and which happens, which is I think a feature of the market, and we don't need to worry too much. And as long as we have conviction and we are aware that valuation is never going to be an exact number, a decimal accurate number, it's going to be a range, and that intrinsic value keeps on changing as the company also performs, the management also gets better at managing that business. So it's an evolving number, it's an evolving metric. So there is no need to panic over sudden sharp cuts. In fact, if the valuations are reasonable, it's an opportunity to buy. Whereas if the stock has risen too sharply, I don't see too many people complaining, right? So it's all right. I mean, if the valuations are too high and you know that it's expensive, there is no need to rush and buy into something. So it's okay. This is the feature of the market.
Okay. So, Ronak, there's an interesting, speaking of management, there's an interesting change in, I think, one of your holdings, a stock called Persistent Systems that you hold. There is a management change. There's a new person coming in who will be based out of the US. So the street has been divided about whether that's a good thing or a bad thing. But how do you look at some of these events? Because, promoter integrity, management integrity, these have become very, very important issues in this market now.
Yes. So because we own it and we have been tracking it for a while, the major problem with Persistent System or a lack of sales has been the major issue with the company, sales growth for that matter. The company was checking along at sub-industry level growth, and management is aware of it. And if the the board decided that a change is required in order to jumpstart that growth again in the company from a person who can operate from a market where they operate 90% of their business from, I think it's a good move, but we'll have to wait and watch as the person gets a firmer understanding of the business and runs the business accordingly, the way the existing management was doing the job. I think it's too soon to say whether it's a good move or a bad move, but it is important that there is an independent board and the chairman is still the promoter of the company. And more or less the things remain same, but we hope that the growth again catches up as the business is out there for the taking. I mean, we can see many IT companies growing at far superior levels in the same areas as this company. I think competition is also there. So we'll have to wait and watch to really give a call on that.
How do you look at what's happening with ICICI Bank? I know that's one of your top holdings. When the year started, that was a consensus buy, and that did well. But the last 1 month has been rather interesting. Even after good numbers, we saw a sharp fall in the stock price. You think the street is fearing that some of the old sins perhaps might come back to haunt them?
It's very hard to say internally what's happening on a day-to-day basis. But if you look at a longer-term theme of private sector banks, there are very few themes you can see scaling at the way the top 4 banks or 5 banks generally will scale. I think it's one of those situations where we have to just see how the cycle plays out, because it's not a great time in terms of corporate governance to see issues coming up with the CEO and the MD and whatever issues that are coming up with other banks and other companies as well. So a narrative does play there, but at the same time, we have seen that the company has a solid franchise. It has a reach of a lot of customers. There is a good, healthy CASA built up in the system, which also provides them low cost advantage over other lenders. So I think we have to just wait and see what is happening. And at the same time, the valuations are not too bad in terms of owning and holding the bank. And there are other elements, which is the asset management business, the insurance businesses, which are also part of the holding company. So even those accrue to the value eventually when they list. The asset management companies yet to list, but other companies are listed. So we'll see how that valuation takes the bank to which level afterwards.
So, Ronak, there's been an end of season sale on in this market in mid caps and small caps for a while now. It's been on for several months. Yet we don't see too many changes in your portfolio. When barring this Amazon change, it's pretty much the same names, at least in terms of key positions. Nothing impressing. Nothing impresses you as of now, or is it the question of pricing? You'd still wait for lower levels.
So valuations is always an important metric, but like I said earlier, if you like a business already, it's already part of your portfolio and you understand it well, and if that business is available at a lower price, why do you want to switch to some other business where the opportunity cost will be similar? If the opportunity cost to own something is far different, for example, if the new stock or a new business we want to buy provides us far greater value, then yes, there is a reason to switch and churn. But meanwhile, if you don't see that happening and existing companies are going to perform well according to you, we should just keep on adding to them, right? I mean, there is no reason to unnecessarily, for showing activity, we don't need to change the portfolio names.
Fair enough.
I think we believe that the stocks that we own right now provide that kind of value to buy.
Okay, you don't think, Ronak, perhaps a Maruti might have reached that zone and might perhaps think about taking some money from Suzuki and putting that into Maruti Suzuki?
I think it's a better way to own it from the parent, because we get the domestic business for free, right? I mean, we figure it out. The other aspects of the business also are available at a very low valuation. You get a two-wheeler piece, you get the assets that they own, you get some royalty. I think it's a far better way to own it with the parent rather than buying a Maruti in domestic market. But at a price, it might be interesting.
Yes, I take the point. I was just, saying it in lighter way. And the bigger question I want to address here is the Indian auto story. What's going so horribly wrong here? And some of these stocks didn't even participate in the last round of rally to begin with. So you have two-wheeler, like you have TVS, which from I think 800, you could argue about valuation, but Eicher Motors, for example, used to be stock for all season. Maruti used to be that kind of stock. We're not even talking about these stocks anymore and the kind of fall that we have seen.
Which is all right, because a lot of times they gotten bid up far severely in the past, right? I mean, they also went up too sharply. And we still have holdings. So we own Maruti via proxy through the parent. We own Bajaj Auto through the holding companies that we have. We own Hero MotoCorp directly in the fund. So there is clearly we are seeing slightly slowdown right now, but it's a longer term story. If we believe the consumer discretion story is there in the Indian market, these are some of the frontline ideas we can participate at a lower valuation. And these are very well run companies. They have seen different cycles. They have grown through far more challenging times. And right now, they are at a dominant market position to take advantage of all the growth metrics that is possible to take. So we'll have to wait and see. It's a longer term trend. It will play out and there will be cycles. So it's okay.
I take your point. I mean, if you go by stock prices, I think the stock market will have you believe that slowly we'll start getting empty roads, as people stop purchasing cars and old cars go off the street. That's not the case. Take one look around you in Mumbai or in Delhi. But final question from my side, Ronak. What about interest from investors? What about incremental money coming in the fund? Is that beginning to look a little tight? Because we've been in this prolonged bear phase where, barring some 6-7 stocks on the index, not much is moving.
which is okay. So you'll see ebbs and flows over there as well. Suddenly there will be a spurt, suddenly there will be steady flows. So we are not too worried about that. So if you have to focus only on the long-term aspects of businesses you own, you can't worry too much about how the money is going to come in. But at the same time, you have to educate your investors. So we put a lot of effort in informing people the way we want to invest in our fund, the process which we follow. It's a longer term oriented process. So I think that gives some sort of patience for even the end investor to go through with that process. We on our website we say that if you have a horizon of minimum 5 years only, then consider our fund. I think that also helps in people orienting their expectations and not judging us too soon in a short-term performance.
Okay, Ronak, we'll leave it there today. Thanks a lot for joining us. Always good talking to you and getting your views. So that's the view from the mutual fund fraternity. Well, and I think an important one. Sometimes we are worried too much about just the stock price correction. How much has the stock price corrected from its highs? Not looking at the kind of valuation that some of the stocks are still trading at. In fact, there have been cases like, for example, Tata Motors, where even after the correction, the stock has actually not corrected in valuation terms at all. And if you go by the loss, technically it's still very expensive stock, right? So you're only looking at price correction, perhaps not the valuation correction, which is more important.